So buy the dip has turned into sell the rips, and people are now starting to look for more secure ways, more safe ways to actually build their portfolio. And I'm going to say when that breaks, not if it breaks.
Not a single one of them is suggesting we're at a top. Now, I look at gold as long term wealth insurance. So it's a store purchasing power with high liquidity.
Hey, everybody, it is Chris Johnson coming to you live from Cincinnati, Ohio. Monument Traders Alliance live on a Tuesday. A Tuesday, no less, not a Wednesday, not a Thursday. Tuesday, because we've got something special. Stephen will put something in the chat so that you'll be sure to be able to mark your calendar for tomorrow. But you remember my guest from last week. We're talking gold all over the place, and there's a reason. It's because we've got another one of those great events coming up tomorrow afternoon. And I think it would be worth your time to just check it out at minimum. So at some point, make sure you check out Stephen's links that are going to be in the side. They're going to be talking to the auditor, talking about the auditor, all of this stuff that, quite frankly, I was really intrigued by. Hope everybody's having a great week. The markets are going a little bit crazy. I've been teasing you with the messages that we're going to talk about quite a few things. And it's one of those days where I can just pop it up right now, but it's become worthless. This is one of those days when things time or they age very quickly. You know how on the internet, all the kids are saying, oh, that didn't age well and that type of thing. This didn't age well. And for some reason, I can't share my screen. Hold on a second. We're having a technology moment. Miles, are you still there? I'm in here as a host. That's why. Do you see that? It is not letting me share my screen. It's literally kind of a little dead button. Mm-hmm. Yeah. No, we're sorry for this, folks. Just give us a second here. This is the first time I've had a problem sharing a screen. And I'm really glad that Miles is here. No, because I've got some charts and such. I will start talking. I mean, is it gonna we just ironically, everyone, Miles and I just had this conversation a second ago. What would it do if I ducked out for a second and then made sure that it didn't say host when I came back in? Yeah, let's try that. Let's try that. Let me see if I can pull that. Again, apologies to everyone here. Yep, trying one more time, and it is not allowing me to do that. Yeah, if you don't mind, do that. Okay. Yep. And I'm going to go step off stage for just a second. Hang in there, folks. All right. I can hear Miles typing something. So clearly I have gotten back in. And guess what, Miles? Are you there? There you go. It should pop up here in just a second. Bingo, bango, bongo. All of a sudden, everything is right in the universe. The tech gods are back on my side, and we are going to get rolling. And don't worry, I'm still going to cover everything that I said I would cover because I'm old school and I print it out on sheets of paper right before we leave. All right, I hope everyone is doing well. I am going to jump right into everything that we were going to talk about. This is already aged. Like a piece of cheese that you left out of the refrigerator overnight. I'm looking at this slide and saying, I don't know if I want to touch it. There are some points that are in play here, but we're going to kind of do this a little bit as it flows, because that's what the market has done today. Leave no assumptions on the table at this point. We have seen stocks bounce around all over the place. Those of you that have been with me for a little while know that this is where I interject one of my favorite terms. Stocks have bounced around like a BB in a boxcar all day, and it is not going to stop. This is one of the charts that I've been watching most closely this morning. Not necessarily the only one. We're going to get to a couple of those because there are a few that you need to be watching. But if you notice, this is the Nasdaq 100. We all know it. We all loved it up until about 3 months ago, until it started losing momentum, which we're going to talk about the details on why here. And I'm also going to see if Stephen doesn't mind dropping towards the end, Stephen, a link to a new Palantir video for you guys. It's really interesting and kind of grabs the essence, as Emerald would say, of what's going on with the Nasdaq 100 and why it's dangerous to buy the dip. Nonetheless, look at what everybody's done today. And if we zoom in on that, and I'll even go one step further and do something I don't like to do, and that is start to look at the 5-minute bars of the Nasdaq 100. And this is along that title of what's going on, or markets now, our first 15 minutes here. This, to me, given everything that the market has been thrown, is starting to show one of two things: either an incredible resilience for stocks, and I'm going to have everybody vote here in just a second with your keypad, or if we can get a poll up real quickly. This is one of two things in this market. It is either incredible resilience or investors, and I don't want to say incredible stupidity, but let's just call it turning a blind eye, whistling past the graveyard, doing these things where we just don't acknowledge what's going on. And I'm not just talking about things that are happening in the Middle East right now. I am talking about the things that are happening when you see the headlines on AI. Right? We're seeing a lot of capital expenditure that's getting bucked back on. We're seeing a lot of those headlines that suggest that more and more people are being let go in Silicon Valley. I don't know if you caught those headlines last week, but you're seeing companies like Amazon, Microsoft increase. As much as this is an economy that appears to remain strong from some perspectives, there are things that are going on underneath the skin that we need to be aware of so that we can answer that question. Is this just crazy? Or is this an opportunity? And I'm going to put it to you that it is not the opportunity that we might think. If you're trading like Nate Bear, and you taking a 5-minute view, 10-minute view, 15, 20, a 12-hour view on some stocks, absolutely. This is an opportunity for you because traders love volatility. But if you're looking out over the next 2, 3, 4 weeks or so, I think we're at a point where you have to call this a little bit more of a warning sign. And we've been flashing it since the January 26th with both Karim and Brian, and then Brian and I again just a few weeks ago. Businesses leaving California for Texas or Florida, yes, but they're also firing people before they're making those moves in many cases. We are seeing those going down. All right, so let me take this step by step and look at what's driving the tape, not just today, but over the last week or so. And these are the things that I check on a daily basis. You and I are going to want to follow them closely. These are the things that will keep you ahead of the trend. The trend. Number one, I've already started with the Nasdaq 100. And by the way, folks, if you have not done it, please make sure you have your pencil, your piece of paper, and your Post-it notes or whatever it is that you're going to write down, because I want you to walk away with 3 or 4 things that you can put up on your Post-it notes on that screen or in an alert on your computer so that you can say, hey, this is that point where I don't have to short everything, but I just need to do a very quick assessment of where we are, because I've got the analogy for you. How many people love the beach? $4.99 a gallon. I think we're down to $2.67 here in Cincinnati. A lot of people don't know that I had my Achilles done a week and a half ago, so I'm not driving, so I can't tell you what the gas price is. But if we look right now, every day, Sorry, I don't want to get caught up too much. Let me go right back to the Nasdaq 100 here, because this is going to be number one that I want you to write. $1.85 in Atlanta. I know that's cheap. Is 600 on the Nasdaq 100. Just write QQQ 600. Every time we dip above or below, something flashes on my screen, because this is the single most. Oh, Eamon asked me that question. I'm this close to buying it. You got to ask me in the last 15 minutes. So I actually have a picture I might be able to show if I can figure out how to share all the screens. But 600 on the Nasdaq 100 has become one of the most widely watched numbers. And I will pull up a screen right now that'll give you a little bit of an idea on why that is critical. You may have seen this before. You may not have seen this before. This is literally one of those indicators that I watch on a daily basis just to see what kind of changes are going on in the market underneath the skin. It is what is referred to as the open interest configuration, and in this case, it's of the Nasdaq 100. I'll go straight to this. For those of you that don't know, and this is a little bit of education you guys are going to learn today, this is a little bit of option mechanics, this is a little bit of everything. This chart is highly unusual right now. Normally, an open interest configuration looks, let's see if I can pull up something that I saved earlier today, looks a little more like this. And this is the open interest configuration for, and excuse it that we're looking at it in an editor's view here, but this is what the open interest configuration looks like for Palantir right now. That's in the video that I just mentioned, right? Notice the green and the red and how they kind of play together. And you get these little points where all of a sudden the red is poking out more than the green, and the green is poking out here. This is one of the best ways to actually start to identify where true support, mechanical support and resistance for the market comes in. And we can go in and do a session on this chart alone here in the next couple of weeks. I'll pull up 10 or 12 different stocks, but keep in mind what you're looking at right now and what it looks like, because this is Palantir's from today. This is what the Nasdaq 100 looks like right now. So this is what the QQQ looks like for the March expiration. These are the options that are going to expire the third Friday of March. I believe it's the 20th this month. And then I also have the Aprils. But notice the exorbitant amount of put open interest. And most notably, that is your $600 strike. So what does this tell you? Volume and open interest are two different things. Volume is something that trades on a day-to-day basis. At the end of the day, you have your sum total of volume, and then next morning it starts off at zero again. Now, when the volume outweighs the number of contracts that are open in the previous day, and we can get into how open interest builds up and closes, but if demand for a contract is higher than what is available in the market, it creates open interest. The more open interest that's created, the more you get these spikes that stand out. This is the most extraordinary view I have seen of open interest of put. Notice the green way down here, but we have seen an extraordinary amount of put open interest in the March cycle that has come into the market. Now, what does this mean for you when you look at this chart? And keep in mind this one and this one, and then you've got a gaggle that starts at the $580 mark. Go back to this chart real quickly, and let's explain what that means among all of this. Well, $600 has been that level that we have not been breaking through. I sent something in our messaging here saying that $600 just does not want to die. There's a couple reasons, mechanics that go into that, behind hedging of those options, and people that are short them, all of that. But what happens, and notice this 600 and how it has just been a concrete barrier for the bears. They have not been able to break through that. Once we get a little more momentum, and notice that that 50-day moving average is now trending lower, 2 to 3 chance you're going to have a closing day that's lower every single day. That's just the stats that are out there historically. But we've got that, and we've got that 20-day moving average. We are now balancing in between a lot of put open interest support And we have another level right here, and this is most notably right at the 200-day moving average. So number one on your page, you're writing $600 on the QQQ. And I'm going to say when that breaks, not if it breaks. When that breaks, we have another layer of that concrete, that dam, that levee that's not going to break down at the 590 level, which is going to be number two that you watch. And down here, look at what happened back in November. So we've got a nice little chart. So we'll have three things that are going to be on that 590. A little bit of support from November. We've got that 590 and all the puts that are there. And this lovely little blue line, which is 200-day moving average. If at that point we move below the 590 level, this is the point where you batten the hatches and you should be protecting every bit of your portfolio that you still got out there. In my case, I'm already hedged on this. I think I talked about it a couple of times last week being one of those. I'm using put options on the QQQ. I'm also using some options on individual stocks that are out there, Palantir being one of those, a number of consumer discretionaries. But the idea here is that this market is now whittling away at that pressure. And remember, every time we touch that 600 level, I should have Brian come on and we could talk about open interest and what happens down on the floors. But every time we touch that a little bit more, it whittles away at a little bit more of that pressure. And eventually the people who sold those options have them hedged and they don't care if it falls through the 600 level. And that's when you start to run into trouble. We see basically a breaking of that levee and a pulling back. Now, I pulled something else out and I mentioned that when we really are kind of going a little bit off of the flow here, which I love it. This is kind of like what I used to call free flow. When I start to look at not only what's going on with this, but I start to look at this, which is the activity at the sector level. And this is specifically what has changed. I set 15 minutes aside for this as our segment number 2. And I'm going to go back and dip on number 1 as well. But number 2 is what is going on with the fund flows. I have a very good friend of mine that works at, smile when you say it, Procter & Gamble, right downtown Cincinnati. This friend wants to retire very soon. He watches the stock like a hawk. I used to work for a trust department at a bank down in Cincinnati, and we took care of all the P&G people. And we watched the stock like a hawk whenever you were zooming in on a year before your retirement or so. And if I back this out and look at it, you'll see that Procter & Gamble has been doing nothing. It's really been doing nothing until the beginning of this year. Beginning of the year, it started and embarked on what is now, I think we're at 145 to 165, so it's an 11%, a little more than 11% rally, and it's in a couple of months. And that's not how Procter & Gamble usually acts. Procter & Gamble is one of those safety stocks. It is the stock that is in the harbor that is, I don't want to call it the biggest boat because it certainly isn't, but everybody here, what do we buy when the economy goes bad? What's the first thing I typically cut? Steven, type it in the text here. Yeah, what's the first thing you cut when times start getting a little tough? With me, I get rid of, maybe I cancel a trip or something. I don't buy that car that I want to buy. I don't buy, the dog still eats some pretty good food, but that's a staple. Wine, maybe wine goes a little bit, we got to get a little tighter before I stop buying the wine. You get the idea. When you go out there and we start to get into a tightening economy, people cut the stuff. Less ammunition, maybe they do. Beer, maybe there's that. Maybe they go out and fewer trips. They don't buy as many shiny things, let's call them. But what you do keep buying are eggs. You keep buying toilet paper. You keep buying beans, corn, everything that you walk up and down the aisle of a Kroger store that is bought from Procter & Gamble, et cetera, you keep buying those. I wouldn't cut my cheese. Who said that? John, I'm not cutting the cheese from the budget. It'd have to get real tough. what you're seeing right now over the last month is that the XLP is that sector that you want to watch. These are your consumer staple companies: Procter and Gamble, Colgate, Palmolive, all of the things that we buy on a regular day basis. I call it the grocery list sector, right? It is on the list, the honey-do list sector. Is Home Depot on it? No. Guess what? Home Depot is not, because it's a consumer discretionary. We choose when we want to go and buy things to improve our home. We choose when we want to buy a house. And if times get tough, you slow that down. But the fact that that XLP is now moving, and it is moving in rapid form, is telling you that a paradigm shift has happened right now that has not happened in some time. We had trouble in this market in 2025, and the market bootstrapped itself because guess what? Everybody was looking for a place to get in and buy the dip. They didn't care about buying Procter and Gamble. They didn't care about Colgate, Palmolive. They didn't care about any of those companies that otherwise are pretty boring. They've all got nice dividends as well, folks. But what happened here over the last 2 months is that everybody started to shy away from buying the dip. And if I go to that S&P 500, if I go to that QQQ, S&P 500's done nothing but go sideways. There's no buying the dip here. And if it is, it's just getting sold. So buy the dip has turned into sell the rips. And people are now starting to look for more secure ways, more safe ways to actually build their portfolio. XLP is going to be one of those. Now let's look at what else, though, has changed over the last 2 months, somewhere around 2 months. On the left-hand side, guys, you've got performance by ETF. This is the major ETFs, all right? It's a little bit of a long list. I could bring it down to 15 for you, but I'm not going to do it because I want to look at everything that's been performing or underperforming. So here is the last part of the year, and this actually goes to January 28th. I'm sorry, I should have updated that, but gold we have at the top, and everybody knows that. I'm excited here at the bottom of the hour. We're going to have Rich join us, and that's going to be a fun little conversation about hard assets, not the GLD, and not trading it, not the SLV, but hard assets. I'll get to that in about 7 minutes, so when he pops into the room. But gold we know was up at that top. Materials are economically sensitive. When we look at it, it's the steel companies, it's the miners. Remember, gold got pulled up there as well. Well, we're going to jump right to it here in a second. Hey, Rich, let me finish this up. And I'll, Rich, I just mentioned Rich. Rich just joined the room. This is fantastic. Rich, I'm going to wrap up here just a couple seconds on the sector rotation that we started saying, and then we're going to talk about the guy that's at the top of the list here, which is gold. All right? Give me just a minute.
Sounds good.
All right, buddy. So we've got oil and gas that's been up there. Biotechnology, which is, there's a trend in place there that we've talked about quite a bit here at Monument Traders, and I think you're going to continue to see that. Those biotech sector companies, they tend to continue to operate, not like the consumer staples, though. They're volatile. Investors are starting to look for less volatility. We had banking and financials. There's your KBE, your KRE, and your XLF. What has happened over the last couple of months, though, here is that we're seeing a little bit of a flip. We know what's going on, and I wrote about something in Monument Traders Alliance. It was a trade of the day maybe 3 weeks ago. We have seen energy demand continue to remain robust, and as a result of what's going on in the Middle East right now, you're seeing a lot of those oil and gas exploration companies do very well. So it's not surprising to see that up at the top, but as soon as we start to get out of that, we're seeing transports that are up there. We're seeing materials. We're seeing dividend yielders that are now at the top of the list. And when we look down at the bottom, you've got the XLK, which is basically a little bit stronger performing QQQ. You've got the XLY, consumer discretionary stocks, guys, Carnival Cruise Line, Best Buy, who announced their earnings this morning, all the retail companies, and you've got the Nasdaq 100. Get the clean energy, I expect to see that. Here's one that really bothers me, though, XLF. So we've seen a flipping of the script here over the last couple of weeks as people are looking for lower volatility, some dividend yielding stocks out there as well. And it tells you one thing, and that is that risk off trade is even going into a more deep slumber here. And that is coming back to the QQQ, why you got to watch that Nasdaq 100 and the QQQ level. Folks, this has been the cardiac kid of the market for the last 5 years. Everybody's looking at what happened with NVIDIA and saying, it's a great report. Stock should have gone higher. The risk appetite has gone down. So give me one more second, Rich. I see you there, and it's
when you're ready.
Here's your second number, everyone. 600 on the cubes. I also now want you to watch for that 27.5 on the VIX, because the performance in the VIX is starting to tell us, and anybody who's watched me, they know that I say the VIX always knocks twice. It doesn't just knock once, it always knocks twice. Well, get what? This morning we got our first knock, and it's taking out these highs, or it's challenging those highs. A VIX above that 2750 is going to suggest that we could see something that goes up around that 40 level. And we certainly have the geopolitical events that are going on all around us to suggest that, yeah, there could be some surprises. Also keep in mind in that market message of what's going on, rotation in the market into lower risk, getting off of the high risk assets, Nasdaq 100, your 2750 on the cubes. Keep in mind, we were getting ready. We're getting ready to get into what I call pre-earnings season, and that is for everybody that's going to start reporting their earnings at the end of March, early April. So keep that in mind, because that's the one thing that everybody will start watching from the headline perspective. I think I've summed it up here. We have a number of things to watch there. We got some stuff to talk about. Rich, tell everybody about you for a sec, because I'm not going to do you justice here. And this isn't an ordinary gold person, everyone. I feel like everybody can be a pseudo specialist in gold nowadays, right? But you really are. Give people the short version here very quickly.
I don't know that I'm an expert. I will tell you, there's a lot of information on the internet, and some of it is true. But no, I've been doing this a while. I've been in the industry for about 30 years. I joined this company in 1996. Mm-hmm. We've been working with the Oxford Club and offshoots of the Oxford Club since back then. So we're very well aware of y'all. We appreciate our relationship. We value our relationship, and wherever we can help, we love to. You guys have been nice enough to talk nicely about us over the years. But basically, we're full service broker dealer of precious metals. Our insights come from the buying and selling physically with retail customers. So we can see what's going on in the markets and offer some insights there that might be of use to your folks. So.
Okay. So I like to bring this up from this, and it's a great day for us to talk about gold, not because it's up, but because it's down. When you look at GLD right now, when you look at spot prices, you've got gold prices that have tanked right out of the gate this morning, along with silver, and it's because we saw the dollar. We saw the dollar index just shoot through the sky, and that always puts pressure on the precious metals. When you look at a chart like this, and let me go back to that G. I'm not going to go back to the spot because the GLD should get us close enough. When you look at a chart like this with volatility, does this bother you, or you are a longer term looking at the horizon kind of guy, right?
No, that's a great question. So it gets to the point of, are you a trader or are you a long-term wealth preservation type guy? I'm the latter. It doesn't mean that I don't understand the trades. You know, when you look at the gold silver ratio and you have the ability to trade, a high GSR versus a low GSR moving in and out of gold and silver, that's wonderful for those that want to do that. When I look at gold, I'm focused on the long term. I just got done writing an article for our monthly newsletter coming out Thursday, which I was basically saying this: keep your eye on the prize. You can look at a day like today and say, gold's down $200, and just get scared to do anything. But you got to understand where everything started. So 4 years ago, and gold started long before then, mind you, but 4 years ago, central banks started jumping into this trade in a huge way. Right. So 1,000 metric tons a year. Central banks bought for 3 straight years. Last year, they didn't quite get there. They only bought 800, metric tons.
Let me just jump in. Has that ever happened historically? Have we ever seen that volume?
No. So the 1,000 metric tons is about 40% or more increase over the average buying for the past 40, 50 years. So major buys by central banks. They were the reason that the gold price rose over the past 3.5, 4 years. And then finally, last year, retail investors started getting into the trade as well. That kind of put it on steroids, and we saw what happened at the end of the year. But we went to 5,500 pretty much unabated, if you want to go all the way back to about $1,500 to $1,700 an ounce. Okay. We needed a pullback. We needed some consolidation, because that's what healthy markets do. And we pulled back to 4,900 or below,
Right.
I want to say. And we started moving back up. We got to 5,300 yesterday, and now we're down all the way to about 5,000, 5,100. No, I'm not putting on the panic lights. I'm not putting on the brakes. I'm not scared to death. This is healthy. We gotta absorb this in the marketplace to go higher. And make no mistake, Chris, we're going higher.
We are going higher. What's your target on gold right now?
I look at a bunch of factors. One, I want to say, if you look at the gold Dow gold ratio, right? You want gold to be able to buy 1 ounce of gold ought to be able to buy, 5 ounces of gold ought to be able to buy everything on the Dow. Okay. And we're about 9.5 right now, 9.4. So that means to get to that ratio, either the Dow's got to drop to about 22,000, or gold has got to go up to about 8,000-9,000 an ounce.
Okay.
All right. I think the answer is probably somewhere in the middle. I think $6,000-7,000 gold is absolutely realistic in this environment.
How often has that ratio been in line? How often have you been able to say, yeah, that was it? It hit that mark.
Every major down, pretty much, it's touched that mark.
Okay.
Yeah.
So that's not only something that could be used, if I'm looking at this from a perspective of gold, it's also something that could be effectively used as hey, when might it be time to start buying the Dow too, right? An inverse.
Yeah. So here's the thing, though. That is a very, very long-term trade.
Mm-hmm.
I don't think that is gonna work for your group, right? There is not enough. You're talking decades. Right.
Okay.
And then I'll put on the next trade. I don't think that's going to work. You miss a lot of trading in the middle, but the bigger picture, there's no question. When gold gets down there, then we've hit the highs, and it should be a great time to go back into the market without blinking an eye.
Okay, great. Let's go back to something you said, because you said retail investors got involved last year, maybe a year and a half ago, right? And I always track investor sentiment very closely. I think it is one of the things that everybody should be watching, because knowing, whether the market's crowded, whether it goes back to the whole thing with Warren Buffett saying, buy when everybody's fearful and do the opposite. And it's an oversimplified term of that, but in effect, it works. I don't care how bad things are. If you bought along, boy, this is interesting. Fitz and I were talking. I think the comment came out, you only get to pick one market top or bottom, historically as an analyst, right? But you can get close enough using an approach like that. And close enough does very well historically. So
No question.
When you said that the retail investors getting excited about and jumping in, after all, the central banks have been buying gold at an unprecedented rate, the thing that goes to me is, all right, is this, is this a mistake? Is this a top? And the other thing I think of, so I'd like your thought on that, but investors tend, especially when it feels like there's a feeding frenzy or FOMO out there, they tend to act very quickly and not think. What are the biggest mistakes that investors can make about gold when that happens?
Well, again, first off, is this the top? No. All right, I just answer that.
Yeah,
that's simple. I look at about 9 different indicators that would suggest the top: duration, gold price, interest rates, U.S. dollar, sentiment, social unrest, political stability or crisis, gold silver ratio, Dow gold ratio. I look about 9 different things. Not a single one of them is suggesting we're at a top. Not one. And I need about 3 or 4 of them to kind of come in like gathering storm clouds to the point where I say, okay, you know what? It looks like it's going to rain. We're nowhere near there. Ultimately, what's driving this train is uncertainty, distrust, lack of confidence in fiat currencies, governments, and the way they're managing their currencies. Okay,
Okay.
every major country on the globe is saddled in debt, and they're addicted to it. And the U.S. dollar is kind of really the benchmark. That's what everybody looks to. And the reason central banks have gone to gold is because they distrust the dollar, the dysfunction in D.C. We can't agree that the sky is blue or that it's raining. Nobody's going to come together on anything. There's such a divisiveness and such a lack of any sort of progress or potential for progress that everybody believes that this is just going to continue for the foreseeable future, and I can't disregard that. So this is not stopping anytime soon. There was a second part of your question though, and I kind of lost it. So if you could refresh.
Sure, no problem. The biggest mistakes that people would make. So if everybody's coming in, normally I'm guilty of this myself. I may come in and see something running away. It's that FOMO. And one of the effects of FOMO is forget about it. We've thrown away the idea that we could be buying at a top. So let's put that on the side right now. And then the second thing is to make sure that you're doing your investment correctly. So, is it appropriate? You mentioned trading versus investing, which is kind of what I'm getting at. There should be a line of demarcation, I would think, with every person here today where they need to set aside, hey, this is my investment in gold and this is my trade in gold.
I love it. Right? I love it. And that's exactly what I was going to go to. That's why I didn't want to miss that second point. So the important thing is to know why you're buying something, right? That's what an investor does. They know why they're buying it and they know what their exit plan is in the end. That's the difference between an investor and a collector. And there's short-term, there's long-term horizons. So for me, just to give an example, way I define things is I look at gold as long-term wealth insurance. So it's a store of purchasing power with high liquidity for a potential financial crisis I hope I never have. If I have one, I sell it immediately. I meet my financial need, and then I quickly as I can, I start building back up that insurance policy for the future financial crisis I hope I never have. That's the way I deal with gold. I also hold additional gold and primarily silver, because I love silver for trading and profits. I own gold and silver in times like these. In a bull market, I own them for profit. All right. Okay. So that gold for insurance, I never touch. I don't care if the market's up, down. I don't care if gold's $5,000 or $250 an ounce. Okay. It's doing its job, storing purchasing power relative to the dollar. For profit, in a bull market, I add another 10 to 15% of investable assets that I trade for profit. And there it is unemotional. I know my objective. I allocate 10, 15% of investable. And if it doubles, what do? I sell half. I don't blink. Yeah.
The house's money, correct.
You sell half. And if it drops in half, what do?
You buy up, you dollar cost average in. Right.
If you do that all the way through the trading cycle, you are going to buy well and you're going to take profits. And who the hell cares where the top is, Chris?
Right. Exactly. I mean, profit is profit, right? So there is a point where you never, and I think you just answered this, it's like the mortgage insurance on my house here. You never get rid of that wealth insurance. As much as we can't say it's insurance, right? But that wealth insurance perspective of your gold portfolio is just always going to be there.
No question. I honestly believe I'm an insurance salesman.
That's awesome.
Of the world's only real money, mind you. Yeah.
That's awesome. Steven says there's some great questions in the chat, so I'm going to try to peek over here while I'm looking at that. But is there... So there's nothing I could do. There's nothing that anybody could say that would get Rich to just say, all right, I'm done with gold.
No. It's been around for millennium, and my little minuscule existence on this earth ain't changing its value.
So when you get to that point, you don't need to have it in an account. You don't have to have it anywhere in terms of, I don't need to have access to it to trade. What is the best way to hold that insurance portion of the portfolio? Is it, I make jokes, and this is a true story. I actually got lucky and got to buy some Krugerrand, and this was years and years and years ago, and I toiled over where to put it. I don't know where to put this, and it ended up in a safe deposit box. What is, have I made a mistake there?
there's no such thing as a mistake as long as it works, right? I'm not a big fan of the safe deposit box because look at what is it, the Silicon Valley, right?
Hmm.
You had gold in the safe deposit box, and then they close their doors. How accessible is that gold for you,
That's
right?
true.
I always like to start my gold holdings by taking delivery of it. I want to hold enough close at hand. I'm not going to advertise it. I'm not going to show it to my friends. It's none of their damn business. I am going to just hold it by myself. I take some risks there, but it's available if I need it in a short-term emergency. And I want to have just enough to cover a short-term emergency till I can bridge a gap to where I can access funds elsewhere. And anything over and above what I feel comfortable storing myself and what I need to bridge a short-term gap, I put in the hands of professionals. I
Okay.
hold in depositories, and I don't look at these allocations, Chris. This is an important point, as mining stocks, ETFs, you name it. If it's a paper version of gold, where you're not ultimately owning 100% backed metal, then that does not go into my gold holdings. It does not go into my silver holdings. Okay.
Okay.
And I say that because in the end, holding ETFs and mining stocks, you own no gold. It doesn't mean they're not fantastic investments. Don't get me wrong. They come out of the equities allocation, though, not out of your gold allocation.
Okay.
And
Okay.
the way I see it, because that ought to be readily available to grab. And that means physical ownership. Nobody manages it. Nobody mismanages it. It's an ounce of gold. It's yours. You own it.
Okay. This is a great question that just popped up. Steven's
Yeah.
helping me right now. Does
All
gold
right.
jewelry work as that insurance then? It's right
It
hands
can.
on. I mean, I
It
could worry about somebody taking it, but is that fits a bill a little bit?
Yeah, actually, if you look in Southeast Asia, they have these bot necklaces where,
Hmm.
they used to, like, if they had to pay a bill or something, they'd break off a link, pay for it, reconnect it, and wear it. They wore their wealth because they didn't trust governments, they didn't trust banks, right?
Hmm.
That was their bank account. That was their wealth insurance. And yeah, jewelry suits that purpose. Understand, you're not going to get as much value for your dollars in terms of gold by buying a piece of jewelry
Sure.
because you're paying for making it into something that's
Somebody did something,
pleasant
right?
to the eye, et cetera. They're a lot of times they're using 14 or 18 karat gold because it's watered down. It stands up better, but the jeweler can make a little extra money that way. The bottom line is when you go to sell it, you're not going to get full value. Right. So you won't get as close to the spot price buying or selling as you would with bullion, coins, and bars. That's what I prefer for that
Okay.
purpose. But jewelry does the same thing. And look at cash for gold. How many pieces of jewelry did those guys buy in the last bull market? They paid people basically nothing, right?
Yeah.
So they could have done better going into a refinery or a precious metals dealer, but they were convenient, and yeah, they delivered money for gold.
We
Pretty
have
easy.
a pawn shop downtown since well, we have a number of pawn shops in downtown Cincinnati, and a friend
Yeah.
of mine went in and just asked the guy about how much silver he'd been taking in, and he said, "I'm not taking in silver right now. Everything's too volatile. I'm going to end up paying more. Whatever I give you, you're not going to be happy with me because I need to make certain that I don't get everything knocked out." And that was right before we saw silver take that 20 or 30% drop. So it's funny when we think about even if you've got it physically, if it's your grandmother's silverware, whatever. First of all, the purity that you've already brought into the question, but then
Yeah.
second is, how much is going to somebody going to how
How
much will the
liquid is it?
spread be,
Yeah.
for
How
the guy
liquid
that's
is
going
it?
to buy it? Yeah.
Yeah.
So going back to that, and I've got one question that I'll specifically ask, and I hope it gets on somebody. Actually, let me get this one. Somebody saw your gift download that you do business with NGC, and I think I'm
Oh
familiar
yeah.
with NGC because they do commercials here in Cincinnati with Rocky Boylman, the old Indianapolis Colt. I think he was linebacker for the Colts. Do you buy and sell PCGS graded coins?
Yeah. So PCGS is Professional Coin Grading Service. NGC is Numismatic Guarantee Corp. They're both the premier in the U.S. grading services, third party grading services. So you can trust them. They have no
Okay.
dog in the hunt. Right? They're not getting paid for putting high valuation on something. You can trust what they do. And we do buy and sell rare coins, numismatics, preferably slabbed in those plastic holders graded by
Hmm.
one of those two
Yep.
sources. Understand that's not what I go to when I'm looking at bullion, right? If I'm
Okay.
looking at bullion, I can get much closer to the spot price if I'm buying coins and bars. right?
Okay.
As opposed to collectible coins. Now you can buy that stuff and sell that stuff to augment your precious metals holdings. It's usually not where I would start,
Okay.
but we
Start
do
basic,
we do
right?
deal with it. Yeah,
Yeah.
and
Start
have
as
for
basic.
30 years now. So
Now, as part of the services that you guys provide, this is where my question's coming in here. IRAs and such. I've heard that there are different ways you can, put gold into accounts that can now be put in under IRAs. Hard to do, easy to do, and is it a suggestion?
it's actually, we've been doing it since 1986. It's very simple.
Mhm.
And I highly recommend people do that. They forget a lot of times about their retirement assets, and
Right.
you ought to be paying attention to them just like you should your current assets. That's what you're basing your future on. Gold's a long-term investment. Include
Right.
it. 1986, you could put gold and silver American Eagles in your IRA. In
Okay.
1997, they brought in that with the Taxpayer Relief Act. You can own gold, silver, platinum, and palladium,
Oh, wow.
regardless of where it was minted, as long as it meant LBMA, London Bullion Market Association, minimum fineness requirements, right? So we've been helping people do that for decades.
Fantastic.
Easy to do. We have a bunch of different trustee administrators. Just contact us. I think you guys are going to put out our contact information, and we
Oh,
can
yeah.
get you hooked up. I got to tell you, Chris, right now, one of the best things you can do for your long term assets, if you have a Roth IRA, we
Mhm.
can help you put Perth Mint certificates, which you can buy silver at 2.25 above spot with no ongoing storage fees. You can buy silver, put it in your Roth IRA, and not have to pay any gains on it. It's probably, eventually, because it's a Roth, I think it's one of the best things I can offer somebody looking for some long-term profits, kind of buy and hold, buy and forget type stuff.
So will silver, you just threw silver into the conversation. There was a question on will silver
Sorry about that.
maintain a proportional rate? No, that's all right. That's all right. A proportional rate to gold. You think it's
Yeah.
going to continue here? And obviously the volatility continues with silver, but
Well,
you
yeah,
think
silver is a much smaller traded, much less capitalized market. It's going to be much more volatile than gold, no two ways about it. Plus, it's got some industrial things factored in, and
Sure.
the supply is inelastic, right? So there's not a lot of pure silver mines. So if you need more, you can't just make more, right? You've got
Right.
to have somebody else need something else more to get some silver with it. So kind of an interesting metal. It also has that monetary aspect to it as well, unlike platinum and palladium. So I'm a big fan of silver. I've been calling for $90 to $100 silver for about 4 or 5 years now. We
Mhm.
finally got there, and now we've pulled back.
Yeah.
But I will tell you that you look at the number of outstanding contracts in the futures market per each physical ounce above ground, it is unsustainable. You look at 11 years of surplus production of silver, followed by the last 5 years of deficit production.
Okay.
The first 2 years of deficit wiped out 11 years of surplus. Okay. And we've been digging a deeper hole for 3 years as the world rushes to build data centers, solar panels, investors are getting into the marketplace. So, on top of that wonderful equation that I just kind of built and that picture that I just put together for you, understand that as of January 1st, China, and I want to say they're the world's 70, I might be off, percent producer of refined silver to the world, imposed new export quotas that cut out a lot of their producers from shipping silver to the world, kind of like the games they were playing with rare earths.
Yeah.
Okay,
Sure.
they're doing the same
Shocker.
thing with silver. I think now with those export restrictions in place, double it. That silver could easily go to $180 to $200 an ounce before all said and done. And if you know anything about me, I'm conservative. I'm not a cheerleader. I don't have the legs to be a cheerleader, right? I just look at what I think makes sense, and I think doubling what my previous thoughts were is making sense now.
Yeah.
So
For some
so
reason,
buy this dip if you're in the silver trade. I think it's a great opportunity.
the Ferris Bueller, I forget her name, but the secretary, where she said, "You shouldn't be doing anything with your bad back," just went through my head. All right, final question, and let's keep it short. But
Sure.
any way that Bitcoin or any of these other things, these new kids on the block take over the demand for gold or silver in terms
They
of
aren't.
placeholder?
They are not digital gold. They are speculation. I own it. I love it. I'm enjoying the roller coaster ride, but I bought it with a small allocation of money that I could absolutely expect to lose, and I wouldn't blink twice. And I want to see where the ride takes us. I don't think
Yeah.
we're done yet. I think it has a purpose. It is not the new gold.
I think
No
it
way.
is the perfect example of a risk on asset. And that's why I think this big fall that we've taken down, down into the 60s here is gone along with high correlation of stocks going down. So
I got mine at $2,300 a Bitcoin, and I wrote it up to 120, and I'm back down to what 70 or whatever it is now. I don't care. I
yeah,
just want to see where it goes.
I think I'm
With small allocation.
3,500. Yeah, I'm the same way. And it just sits there. And my kids ask me about it all the time. Where do you store it? It's stored. I don't even.
It's on a wallet. I got it.
Yeah, the
It's
cold
mine.
wallet that sits around. Hopefully it's cold. Now you don't know which ones are cold and which ones are just lukewarm anymore. Man, it's been a great little conversation here, Rich. I'm going to give people another 9 minutes of talking to me and asking me all kinds of weird questions about the market and such. You come back and see me again. Check in the link, everybody, because I know Stephen was talking about dropping some links in there on how you can check out more about what Rich does. So thanks for
Fantastic.
your time, buddy. We
Thanks
really
for having me.
appreciate
Thanks
it.
for the wonderful questions, and good luck. Good trading.
Great conversation. Thanks. Same to you.
Bye-bye now.
All right, everybody. I am going to go ahead and take it from here. As you know, I like to do a little Ask Me Anything. You can ask me anything for the next 9-10 minutes. We'll do a little free flow. Ask me about that open interest chart. Ask me about, don't ask me about specific advice. That's all I ask. I don't want to, I'll take a look at a chart and I'll tell you what I think about it. Maybe it's going up, maybe it's going down. But yeah, I'm not going to give you something exactly. Eamon wants to show the car. Eamon at the 70s. Hold on. Somebody just put this in front of my face the other day, and I'm not sure. I drove an El Camino when I was in high school, and a friend of mine has this and just got done restoring it. It is redone to the nines. Are you ready? Let's make sure I can do the share here again. You only get to look at it for a second because I do want to move on to the other stuff, but it is Ask Me Anything. So there you go. Nice El Camino. Everything's been done on it. The transmission, the whole 9 yards, and the Stone Cold Killer would look awesome riding in the passenger seat with me. So that is the car I'm sitting around toiling about and might actually end up, I don't know. We'll see what happens. We'll see what happens. And I'm getting it at a steal. It is a little lower. It's a 454 he dropped in this thing. It is a big boy. It'll go. What do I think about the QQQ? Let's get them in so I could talk about the car all day long. All right, write it down. 600 on the Nasdaq 100. Not only do you have this chart, but you've got this as well. That open interest on the 600, then you got 590. A break below the 590 gets us to waterfall. I think it triggers a bigger move. I think you're looking at a situation where we could see somewhere around a 15 to 20% pullback in the Nasdaq on 100 on top of what we've already had. Things are not great. Make sure also that you check out the gold event tomorrow. We just got done talking to Rich about gold. We're talking about gold from every aspect. The auditor. You get to figure out who the auditor is. It'll be fun. How do I pick a strike price? I'm guessing that so the open interest configuration chart is something that I'll tell you the way you can do it. I use Thinkorswim in this particular case, and I've got all the links set up in an Excel spreadsheet, and it goes out and pulls out all the open interest. Strike, call open interest, put open interest, and bam. You plot it on a bar chart. That's it. You can do it for any stock. In my case, maybe one of these days I'll put the spreadsheet out there because I think it'll work with any Thinkorswim application. So it is literally one of the best tools that I've had in my arsenal, and I've been using this for 20 different years. We'll check out, I think we'll put up the link for the YouTube because I don't want you to go watch it just yet, but the Palantir YouTube actually has the open interest configuration charts for Palantir in it as well. They're awesome. How do I pick a strike price? And I am looking for, I'm assuming that to go along with the NASDAQ 100. Folks, I'm already short the cubes. Full disclosure, I bought protection on them months ago. The way that I trade these any longer, I trade more time than I need. I don't think I need to thread the needle in a hurricane when it comes to making a hedge or something that is playing to a trend. So I buy 3 or 4 months worth of time premium. Sometimes I'll buy out to September at this time of year. So we're talking 6 months of time premium because what do I care? Somebody's going to give me the money when I sell the option for that time premium, or at least a good chunk of it. The worst thing in the world is you run out of time on an option, and then a couple days later, whatever you had that option on completes the move you expected. So I just take that out of the equation anymore. Picking the strike, I look right at the money, or I go a little bit in the money on something like this. Again, I'm not speculating. I'm hedging here. I don't want it to move 10% before it hits my target and then starts seeing some value. So go ahead and don't be afraid to pay up for some of these options. Cheap options is maybe not such a good, cheap cars. Nobody looks for cheap cars. You look for valuable cars, right? Let's keep looking. Yeah, been there, done that. That is easy. Anybody else here got another question? Is a break below 590 or a close? 2 closes below. That's the rule I always use. You can use whatever you like there. But yeah, 2 closes below. Look, that chart today, I think, is an amazing. If you look at it, we closed below here, and now it looks like we're not going to have a close below here. Closed below here. Next day we popped. We closed. That's it. You got 2 closes in the last month below, but no 2 consecutive. I always look for 2 consecutives. Yep, EODs. Let's go. Anything else, guys? You got about 4 or 5 minutes. You've seen the car. What's the easiest way to buy gold or silver? You know what? We just listen to Rich, and obviously we like having him here for his expertise. You can also join the event tomorrow. I know that there, if you look right up at the top of the screen here, you're going to see a link to that event. So you can add that to your calendar right now. That is going to be Mark talking about everything from the auditor to the way that he's going to be investing in gold. And it's not buying gold. It's a lot less. So a lot less in terms of cost. So it gives you a little bit of a leverage. In my case, I like to buy the miners. I like to buy the SLV. I like to buy the gold, the GLD, but I also like to leverage those, and I use the same rule I just gave you. Man, September options on gold are great. I don't care if it drops 4% today. Maybe I'll buy more at another time, but do as you, what is fit for you. If you're trying to trade it for the next couple of months, then GLD and SLV might be one of the best ways to go. It's easy. It's simple. Boom. I do think that everybody should be looking at, and I mentioned I do have some gold coins here. They're not here, but they're at a bank that I hope doesn't go bankrupt, because it'll make some big waves nationally if it does. But take a look at owning some physical gold. I did not think about it for a long time until I started thinking about the idea of actually protecting wealth, and that's the difference. Nugget is down 20% today. I'll look at that chart real quickly. NUGT is your this is miners, and this is also a leveraged miners. I think I saw Big Cap in the chat, which is the first time I've ever seen his name here. Welcome, Big Cap. It's good to see you again, buddy. He knows what I say about gold. You invest in the trend, right? And then you trade the miners. That's as simple as it gets for me. The volatility's in the miners in a lot of cases. Karim has gone over us with that, right? The Hecla and companies like that are going to give you more volatility, and traders like that. So for that reason, I look at this, which is a gold miners index, and it's leveraged twofold. Remember, long-term holds on leveraged are going to cost you a little bit more money than going out and using maybe an option. You have to play it out, but basically you're using, you can do the math there. But nonetheless, this is one of those aggressive ways that you can play the trend by just buying an ETF, and I don't hate it at all. Purchase silver. Do they only sell? I'm not sure whether they do sell or not. Do you sell options against your positions? Yes, I do sell cover calls on positions that I am looking to hold long term. And a lot of people don't know it. You can sell cover calls on in the money leaps. And that's one of those strategies that I do as well. A lot of times just because it's a little bit of tax management or tax maintenance here, trying to avoid taxes. And a lot of people will say, well, you can just let it expire. Normally, if I think I'm going to get those things called away from me, I just buy the option back. I keep it simple. There you go. Steven's giving you the number to call. Sell options against, try IGLD. 3 o'clock here, so I'm going to do one more. Do you roll out your options occasionally? Yes. as part of my, if I'm getting too close, the number one category or the number one reason that I start to look at rolling options is if that trend is playing out and I'm starting to tick down on time. Remember how that time premium chart, the decay is structured, right? First third, first quarter of that life, you're up in the top of that time decay and your theta's not killing you right there. And it's that last half that really starts to rip out that time premium. That's where I start to look to hold. Remember, I just said September in some of these instances. So June, July, I might be looking to roll some options and taking the hit on the time premium because I'm going to roll out and buy more time premium, but it's only because I'm looking at managing that position long term. When I invest in options, and this is different for everybody else that's here, number one, it's because I can diversify easier. Number two is I can do so many tricks because I can turn the knobs and push the buttons and pull the levers and change around how those type of strategies, rolling options, will affect my bottom line over the next 6 or 12 months. Rare is the case that I'm looking to get into something and get out in the next week or so. I like to sell stuff that's, every 2 weeks you got something you can sell because you bought it a couple months ago. All right. Silver put's still in play. I think you're going to see some downside on silver, but I like the buying opportunity there. That's it for me. I will see you next week. Make sure, again, click on the spot up here. I'll also be back on Thursday afternoon. You get me twice this week. Thursday afternoon, for those of you that have been curious about the War Room, I'm going to give you a little tour through the War Room. We'll talk about it. And of course, there's going to be some sort of great deal involved. Check it out. I will be live on Thursday right here as well, going through the War Room with everybody. Bring your questions and everything else. And I'll see you next week. All right. Have a great week. Check out that Palantir video on the YouTube, Monument Traders Alliance YouTube. You'll love it. Have a great day, guys. Wish you the best trading success.